Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions Market Insider TV. This is our opening commentary. It's Monday, the 21st of July. Hope you had a great weekend. And you're looking forward to a good day of trade. If you're in the energies, check your positions. A lot of August energy positions either go off the board this week or have first notice day. So a lot of things are moving in the energy markets as far as our energy markets go. Grains have a fairly quiet week. No major reports this week, except for progress afternoon, export inspections this morning, Thursday morning export sales. We'll talk more about this later, but we have cold storage, cattle inventory, and cattle on feed coming up this Friday. Let's get into our overnight markets in here, as we've been a day or so without a TV segment. The dollar index is a little bit softer in here this morning. That's supporting a little minor rally in wheat. We're 2 to 3 cents better in the wheat. Natural gas is 13, 14 cents lower. Crude oil basically unchanged. All the stock market's firmer in here. Option expiration for the equity markets was Friday. And then you have gold, silver showing some strength, but corn down 2 3/4, beans down 7. These markets rallied on Friday to partially fill the gaps left after the 4th of July weekend. We came back that Sunday and gap lower, and we partially filled those gaps on Friday off of forecast for really hot, dry conditions. We'll talk more about that in a minute as well. And products are mixed. Oil down while meal is higher, and wheat 2 to 3 cents better, as I mentioned. So let's get into it here. I'll be doing RFD TV this morning, 8:15, talking about the markets. I'll also be doing RFD Wednesday, Thursday, and Friday of this week. So check us out online, MidwestMarketSolutions.com. Follow us on Twitter, Midwest Markets, and Brian Hoops. Don't forget you can sign up for newsletters and our text service at our website. While you're there, you can look at a list of our offices. You can see 5 offices around the Midwest for you. All right, let's talk about markets in here. 6-10-day forecasts are calling for well above normal temps and normal precip for the Eastern Belt. So very hot conditions in the next 10 days. The drier conditions are going to be in the Western Belt. They've had really good rains that will help get us through this, and the trade doesn't appear overly concerned. I think we kind of traded this heat Thursday, Friday, and then we're now looking at much better conditions in the longer term forecast. So very hot, very dry conditions in the next 6-10 days in areas that are planting double crop soybeans, but a more moderate forecast is revealed for early stages of August. It's going to be more back to this return of more water and not as much heat. But the heat of the summer, we haven't had a lot of these heat days. It's coming here this week and most of next week as well. And if you're in the Southern Plains or Western Corn Belt, you may not have a lot of moisture to go along with it. Last trading day for August grain options is this Friday. That's the 25th. And the Wheat Quality Council tours of Hard Red Spring and Durham areas begins today, and it goes through Thursday. Crop ratings for spring grains, pretty disappointing so far this year, well down from last year's numbers. We'll see how the tour compares to last year's yields. That's what I'll be watching closely in that tour. Cattle on feed report comes out on Friday, the 25th. That's at 2 o'clock. Now, the USDA did away with the semi-annual cattle inventory report in 2024, so we did not have a report last year, but they will have one this year. So that's going to be released at the same time. Cold storage also will be released on Friday afternoon. So very busy report Friday afternoon for the livestock. In the cash trade last week, a little bit of surprising trade there. Moderate trade, 240 live and 380 dress, mostly steady with a week ago, but in the South we were higher, steady to higher, 230, 231. That's steady to $2 better than a week ago. But look at the cutouts. That's going to be key. It shows us some ideas about the demand. And cutout was lower. Choice was down $12, and select was down almost $15. That has hurt the packer margins. So those packer margins went from being in the black to being sharply lower. And that is going to, I think, stall our cash markets out. So I would say no better than steady this week until packers start to slow their kill speeds again. And after buying pretty aggressively the last 2 weeks, I think that's what they'll probably start to do into the end of the month, is slow those kills to prop up some margins and get those cutouts to at least stabilize. But we're in a softer demand time frame from now until Labor Day. All right, I'm going to sign off, but wish you a great day of trade. Good luck, and as news develops, we'll pass along to you. This has been Brian Hoops. Have a great day trading.